Happy VA Wednesday. So today we're going to be talking about VA refinancing. If you're a veteran who owns a home, your phone is ringing off the hook, you've probably gotten 900 mailers in the mail. So today we're going to talk about the two different types of VA refinances and what you need to watch out for, okay? So first of all, did rates come down? Yes, from where they were at their highest in November to now, they have come down. But if I look at a historical chart, I'm not seeing rates really be that much lower than at best loans that were closed from August 22 and later, okay? And you may be like, well, wait a second, my rate's really high. Look, you could have a really high rate. I don't know what lender you worked with. And that's the thing with VA is it's like, if I'm looking at my clients, there's a lot where I'm like, yeah, we're not ready to refi yet. It doesn't make a financial sense for them because that's what I'm looking for. Does it make financial sense for them? And I'm not seeing a lot of it right now. However, look, you may have worked with a lender that really got you good and you may be able to save 2% right now. If you can save 2% right now and the lender doing the refinance is not charging you fees, you totally got ripped off the first time, okay? I would not go back to that person. I'm just gonna say that out loud because it's true. So here's what you need to know right now. In December, the Fed came out and they stopped raising rates and they said that they thought in 2024 they were going to do 3 decreases. There's a big portion of the financial markets that thinks they're going to have to do more than 3 decreases. Now, this doesn't directly affect mortgage rates. However, it does affect financial markets. So there is a very good chance that rates are going to continue to go down next year. Now, I say this because every lender's trying to get you to refinance right now, but with a VA refinance, whether it's cash out or an interest rate reduction loan, you can only do it once every 210 days from your first payment. So that works out to a little bit over 7 months, okay? So here's what I'm seeing math-wise, and I'm doing kind of my alert up front because I know a lot of times you guys don't get to the end of the videos. I'm boring, I know, it's okay. Here's the alert. There are fees to do a refinance, okay? If you're not exempt from the funding fee, with a VA interest rate reduction loan, there's a 0.5% fee that's financed in. With a cash out, it is 3.3%. Yeah, it's a lot. So if a lender's saying, oh, there's no out of pocket, that just means it's not coming out of your pocket, but it's coming out of your house because it's going to be financed in. I was looking at a refinance scenario recently for a gentleman in Texas, and it was going to save him a lot. It was going to save him $150 a month. That's a lot. But the title and escrow fees, right? Because when you're refinancing, you still have title and escrow. We waive our lender fee, but not everyone does. Some lenders are going to charge you underwriting, processing. They may have a loan origination fee. They may be charging you discount points to lower the rate. There's a lot of fees, right? And they're counting on you not to pay attention. Because if you pay attention to your loan estimate, you may go, okay, I owe $400,000. Whoa, with my new loan, I owe $430? What? To save $100 a month? What? Okay, that wasn't the situation I was pitching, but I've seen some of those recently. So guys, look at your loan estimates if you're going through the refi process right now. And if you're like, I feel like this might be bad, Jen, can you look? Shoot me a text. Get on the calendar, send me an email. If you watch this channel, you know I can look at everything except, so I'm licensed in 48 states to do mortgages. The only 2 I can't give you an opinion on are Utah and Rhode Island. But if you're in those states, I have a very good friend who can. So happy to look at it for you guys. So in this case, like with title and escrow, the gentleman's fees were gonna be about $3,000. Yeah, title's not cheap. And it was going to save him $150, but I'm like, look, if rates continue to go down, because he thought they were going to go down too. And that's the thing. It depends on how you feel about the market and how comfortable you are with risk. If we ended up doing another refinance, 7, 8 months, the $150 that he saved every month wouldn't even cover those fees. So that doesn't make sense, right? And that's what you guys need to think about, because lenders are just gonna pitch, well, it's no out of pocket to you and we can do it again if they go down further. But you gotta look at those loan estimates because they're increasing your loan to cover the costs. Now, have I seen any lenders doing no cost at all and dropping the rate? Not yet, not yet. But is it possible? Maybe. You know, you definitely want to look at those loan estimates and see if your loan amount's going up, okay? Now, let's talk about the other thing that people are doing. So a VA interest rate reduction loan, it has a lot of regulation around it. You have to show an actual benefit to the borrower. The rate has to go down at least 0.5%, and it has to be able to pay itself off. The cost has to pay itself off within 3 years, okay? No documents on an interest rate reduction loan. These are my favorite, okay? There's no documents, there's no appraisal, there's no termite, and it has to have a real benefit for you. Great. It also has the lower funding fee if you're not exempt, so 0.5%. Cash out, right? If you're not exempt, you've got that 3.3% funding fee, and if the lender gives you cash, even if it's like $2,000, they can totally screw you on rate and fee, and it's okay. Yeah. So when you guys open your mail and you see the mailer, we've all seen this one, everybody gets it, where it says, your VA benefit entitles you to a payment of XYZ and $4,000 cash out. Why are they doing that? Because they don't want you over here, my friend. This is where the government's trying to protect you. They want you here in lender Wild West land. The minute the lender gives you money, they do not have to show that the refinance pays itself off within 3 years. That is why they want you to take out cash. Okay. Do I want you to take out cash? No. Usually if people want to take out cash, we talk about it, and it's not, I'm not being judgy or anything else. I'm just trying to have the conversation that will make it so that it's a benefit and not a burden. You know, so like, what would be a great example? I'll have someone call me and they'll be like, hey, I really want to remodel my kitchen. I want to take out 30 grand. And I'll be like, have you gotten a quote for the kitchen yet? No. Have you drawn up plans? No. Have you priced out the tile, the sink, the refrigerator, the everything? No. Okay. Price that stuff out and then call me back and we can totally do it. Okay. And look, they could always be like, I don't want to. Give me my money. Okay, that's fine. Right? But most of the time if people call me, it's because they know that I'm acting from a place of, you know, knowledge and wanting you guys to be in a good position. 9 out of 10 times they call me back and they're like, oh my God, it's so expensive. And I'm like, I know. The $30,000 kitchen remodel, once they talk to a contractor, once they price stuff out, is $60,000, $70,000, $80,000. Or, you know, if they're going to do it themselves, I'm like, great, go figure out how to lay tile before we touch your piggy bank, you know. And in a lot of cases, these were people with really low interest rates, you know, and there's so many allergies. There's so many lenders who are always pitching for you to take out cash. And you're like, well, the lender said, guys, they're just trying to make a buck. It's that simple, right? They're trying to make a buck. If someone has really low interest rate, the only way you're ever going to get business from them again is if they sell or if they take out money. It's that simple. Okay, that's why you have so many people telling you to build a pool in your backyard right now. Anyway, so definitely approach with caution. The other pitch that I'll hear lenders do that makes my skin crawl is I was watching a YouTuber, and it's a lender. She actually does a decent amount of business, totally predatory. And she goes, you should take out all of your equity. That's what rich people do. It was a video about rich people's secrets that they don't want you to know. Those videos, I'm telling you, like, guys, look, I see a lot of finances. I see rich people's finances, and I can tell you, they are not trying to take out every single nickel out of every property they own. That is propaganda sold to people, right, to make lenders money. It's that simple. It makes the lender money if you're constantly taking the equity out of your house. If you don't have a plan for it, in many cases, you're paying more interest on that money that you took out than you're ever gonna make off of it, right? You know, and then people are like, oh, I'm going to get into flipping or this or that, and they don't research and it ends up a nightmare. Then they need more equity, and then just don't take out money without a plan. And watch out for anyone who's trying to have you take out money. So just to kind of wrap this up, the basics are this: VA interest rate reduction loan, no documentation, no appraisal, no termite, magical, quick. I think that when we start doing a lot of these, and we're not doing a lot right now because I'm not going to do a refinance if it doesn't make sense for you. It's not in my business plan, right? We do really well because you guys know we care by helping you get into houses, and I want you to keep the house. So if the market drops to a point where we're doing a bunch of these, we'll be closing them in between, I would say, 10 and 13 days. Okay, they're fast. There's no documents. There's no reason for it to take a while. The reason I even say 10 days is because legally, from disclosures to closing, there is a time period, okay? VA cash out refinance, full documents, full appraisal, full termite in most states, guys. This is a real deal. So unless you need the money, maybe there's a medical emergency or you got into debt and you're going to pay it off and this is the last time, you're never going to do it again. Okay. Or maybe you're going to buy another property. Whatever you're doing, just make sure you have a plan. And if you're not exempt from the funding fee, remember that funding fee is 3.3%. Watch out for lenders pushing you to take out cash, because a good lender, they're going to want you here, guys. And the reason they're going to want you here is because it's less expensive for you, it's quicker, and it gets you to your end goal faster. This one, it's the Wild West. So as always, I said it in the beginning, I'll say it again. If you want us to look at a loan estimate that you're getting from a lender, we're happy to. Quick warning, guys. Look, you should be the one pursuing the lender, okay? If you're suddenly getting calls and mailers, like, I wouldn't work with those companies because they're call centers, they're bottom feeders. It's not someone who's going to take the time to see if this is a good financial decision for you. So really be aware. Feel free to reach out. We'll look at it. We'll look at, when does it make sense, and put together a game plan, because this is your money. This is your home. This is your future. Let's treat it with the weight that it deserves. So as always, thank you for watching, and I hope you're all well.